Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Looking at the Australian dollar, it's been a long bearish trek since the market hit a peak around 76.60 and with the downside objective reached at 73.70, and along with that does see the technicals improving slightly, may have found a short-term bottom. With that said though, the 60-day moving average is seen around 72.90. And at present, though, I feel the market may show a little bit more upside. Now, looking towards that top side, around 74.05 would need to be broken and therefore expose the next target around 74.65. But in the meantime, though, I'll hold a neutral position, but I am slightly turning bullish due to the recent downside objective reached, and also the fact is we're seeing a little bit of momentum coming back into the market now. The euro has reached its downside objective, which was seen at 107.50 to 85. Now, with the support holding at 107.50, there is a little bit of divergence here, but however, the trend is still somewhat strong to the bear case. Now, the dollar index, which measures the greenback strength against a basket of 6 major currencies, rallied to a May 2020 high at 100.99. Now, from that, the market may actually continue to the rally, that is to the US dollar, and may press on towards 101.50 to 102, and therefore could see further slippage. Now, if we break 107.50, the next target is seen at 106.10. Well, it is a very impressive uptrend when we look at dollar yen, and the fact is that the market continues to accelerate as it rapidly rises now to around 128. The technicals are very, very high, and also the fact is the ADX is overheating. Although I hold a neutral view, I'm looking at this trend line now. I've seen at 126 figure 10. If that is taken out, then the call is bearish and back towards the 123 region. Sterling gave back all its gains after the bullish outside range day, but is somewhat finding a little bit of demand around this 130 level. That being said, though, I feel the weakness may continue to the start of this week and look towards 129.45 and then may see a recovery back towards 131. Sterling Kiwi still on its upward trek since that bullish hammer that came into play just recently from the rejection of 191, and now looks to 194. 40.60 and reassess from there, or around maybe 20.40 to 40.60. A shooting star in place for gold, and therefore looks towards a confirmation, that is, from this candlestick, and that is a 1960 break. That would see a drop down towards the region of 1920 to 25. In light of the pattern, I'm not going to get too bullish at the top side due to this candle, and therefore should see a further test towards that support. And finishing up with oil, the market reaches its 106 objective after extending from the break of 103 and now reaches around 109. If this pattern continues, we may actually even see a rise up to 112 to 114. But as I mentioned many times, the volatility in this market is just too erratic and very hard to put any kind of assessment on it. But looking at the broader parameters, it is coming into fact that that's where the market may actually start trading. That is, you can see here the rejection of 116 may actually come into play as a bear case if reached, with the downside finding the base around $92 a barrel. Well, that wraps it for the start of the week. Thank you very much for joining me. As always, look out for the Insta report, and I hope you enjoy the rest of the day.